So much for the entertainment arena and Eccovidiale 2016. Let's move on over to our closing quarter of this programming, and that's Tax Solutions. This is a presentation of CPA Adil Baloch, who is the founder and chief presiding CPA at Accurate Records and Tax Service. This week, moderator attorney Daniel J. Wright has a series of questions on, quote, watch your bottom line, unquote. Let's hear these two gentlemen.
Good morning and welcome to Capitol Forum. My name is Dan Wright. I'm an attorney in Rockville, Maryland, and with me today is Mr. Adil Baloch. I'm fortunate to have Mr. Baloch with me. He's a very prominent certified public accountant. His office is in Montgomery Village, Maryland, in Montgomery County, and he is a certified tax resolution specialist and a counselor to small businesses throughout Maryland and the United States. He's been doing this for a number of years, and he brings a lot of expertise to our show today. Adil, thanks for coming.
Thank you. Thanks for inviting me.
Okay.
Thanks for having me over.
Now, our topic today is called Watch Your Bottom Line. Most people who own a company would say that the main reason they're in business is to make money. There's more to being successful, however, than the absolute dollar amount you bring in. Adil, could you shed some light on that statement?
Sure. I wouldn't say most business, I would say all the businesses, and pretty much everybody that gets into the business, obviously. When you file the articles of incorporation for the business that you're going to be getting into, most people will write, I will be doing such and such, I will be involved in such and such trade for profit. Unless it's a nonprofit organization, it's different, but you,
Sure.
So you start, the foundation starts with, I will be making profit. And hopefully people who start doing business, they make profit and they do well and so on and so forth. Obviously, there's ways that you can start making profit a lot sooner, a lot quicker, by doing some very basic things, exactly as someone would advise a child that, eat your vegetables. Yep. For a business owner, watch your bottom line is pretty much the same thing. That's an adult equivalent of eat your vegetables, because that's where the whole thing goes. The healthier bottom line gives you the opportunity to reinvest into the business, grow quickly, and make it even healthier, and then hopefully achieve your goals. And whatever is it that you're looking to do, short-term and long-term, you're able to achieve those at a much faster pace and take it from there. So, yeah, it's basically in being in business to make money. Of course, there are certain things that you have to do. Watching your bottom line obviously is as generic as it gets. This is this is what it comes down to. Pretty much, if there's one thing that you can take, is just watch your bottom line, make sure that it stays within your control, and then you are trying to boost it in whichever way possible, and we just take it from there. That's one of the very basic things, as I said, that can go into the efforts of sustaining and hopefully growing that business.
Well, I suppose in order to watch your profit margins, you first of all have to figure out what they are.
So, of course, so the way it always works in any business, I shouldn't say any business, for the most part, majority of the business, you're going to have your direct costs and you're going to have your indirect costs, something that you absolutely have to spend. You are in some kind of retail shop business, you're going to have to buy the inventory so you can sell that inventory at a markup. When you buy the inventory and then you sell it at a markup, you look at the difference. That's the first step in looking at the margin, which is your gross margin line.
Okay.
You bought the inventory, you added the markup, you sold it. Now, in your mind, you may have bought the inventory at a certain cost, and you may have already calculated a certain margin, thinking that you should be making that margin. But if you do not keep track of it, if you do not monitor it constantly, obviously you don't know for sure whether that margin is actually being achieved the way it was intended, or if you're achieving even more than what you expected. I mean, either way, you want to keep an eye on where the margin is compared to what the expectations were. And it can only happen with doing the homework, with actually capturing all the information, writing everything down. If it's a retail business, it could be breakages, it could be damages, it could be thefts, it could be that there are other costs involved in maintaining the inventory that you might not be aware of. Unless you monitor everything, you probably will not be able to get to that point. That's the very first step. Your gross margin is the first step. Now that you're at your
But
gross
taking
margin,
an accounting, keeping track
correct,
is so important.
it's very
isn't it?
important. Exactly. So keeping track of it, getting to your gross margin by doing that and doing a good job, not just
Yeah.
keeping track just for the sake of keeping track. No, you
Right.
need to get some meaningful information out of it so you can make some knowledgeable decisions.
I see.
Getting to your gross margin now really is where your management skills, your business acumen, and those kind of things really come in. And you can only implement those things or only become better at those by monitoring your net margin. Now, your gross margin is what you're left off after you paid for what you bought to sell.
Okay.
So what you paid for your inventory, that money's already out the door. The margin is in your pocket now. Now you have to maintain that margin or work with that margin to be able to boost your bottom line as much as possible, of course.
Okay.
So it's one thing to boost the top line and come up with a higher gross margin, but it's completely different to have a gross margin and then ending up with a certain net margin. Because your net margin, you could actually look at increasing the revenue by tenfolds. But if you're not watching your bottom line, if you're not controlling your expenses, your net margin might be completely off. You might not get anything out of it. So it's equally important to watch the net margin compared to the gross margin, and those are the two lines. Even though it's your gross margin might be in the middle, it might be a middle line, but they're both bottom lines. You have to watch both of them. You have to make sure that your direct costs are contained to the extent that your margins are achieved as expected.
Okay.
And then you're constantly watching your net margin, because there's so much that goes on between the gross margin and the net margin. Your overheads, your expenses, and everything that you could potentially control, your fixed costs, your variable costs. There's so much opportunity between those two lines that you can actually do a whole lot more than you think if you keep monitoring it and making decisions based on how everything is coming out.
Yeah. How do you achieve control over your profit margins?
It's a good question. As I said, you can actually increase the revenue as much as you like, but if you're not controlling your expenses, if your expenses are increasing with the revenue, with the gross revenue, you're pretty much ending up with the same number, no matter how hard you try, no matter how much sale you do. So, monitoring, keeping track.
Yes.
You probably should. A new business, you probably should. It's almost a given that you have to have some kind of budget in place. Yeah. If you do not have a budget in place, you're not going to know what you can afford to spend and what you should be spending. Having a budget in place gives you a benchmark that you can compare against at the end of maybe every 3 months, depending on your situation. People even do it on a weekly basis, just so, because the way I put it is that even if you're losing money, you want to know how fast are you losing money, or how much you're losing money.
That's true.
And if you find out that you're losing money, I mean, give you an example of a professional, a medical professional that I've worked with over the years. Very successful professional, never takes any stress. He just enjoys his profession. He loves helping people, but then on the same token, I have always been a strong proponent with him to, well, at least let's do something about yourself too. I mean, put some away so you can actually start thinking about retirement and all.
Yeah.
Whenever he has gone into some kind of issues as far as where it shows that there's not enough cash flow in place,
Yep.
and then going back to in the history and looking at certain points the cash flow was low, I asked him, what did you do at that point when your cash flow was low? He said, well, I just went out and I saw more patients that day. I said, well, yeah, he took care of the cash flow,
Right.
but he never realized that he had put in twice the amount of effort, which would necessarily mean that your bottom line should have some boost.
Right.
But in this case, nothing is happening to the bottom line. He's just putting in more effort so he can bring it back up to where it needs to be.
I see.
That's a very good example of not watching anything else and just making sure, okay, let's pump it in, let's bring in more at the top level so we can take care of the things here. He never took the time to go back and see, okay, where was this all going? Why was 2 months ago I was perfectly okay, nothing has changed significantly, but why this change? And when we sat down and we looked at the things, we did point a few things that because being a business owner, not everybody has the time to look at every single thing.
Right.
Obviously, so if you actually take the time, sit down and just make yourself a point to dedicate maybe an hour on a weekly basis, just to dedicate that hour to look at the numbers.
I see.
Where did the money go? How much did I spend here? Not just putting receipts in an envelope and adding it. No, just put it laid out in a financial statement format.
Okay.
Just do your additions, do your subtractions, see where you stand, both on your gross margin and your net margin. Now you can realize where the problem is, if there is a problem.
Right.
And by looking at everything in detail, categorized properly for you, now you have the opportunity to also look at, okay, these are the things that, I might be able to cut down on or might be able to just completely get rid of. Because if you don't see it laid out, you don't even think about it, and making a decision is almost impossible at that point.
Are there reference works where a small business owner can see how other businesses are spending their expenses compared to others? For example, a small wine store or wine and beer shop, they might wonder, how much advertising do I need to pay for? And they, can you see, are there places where you can look and see?
Absolutely, there are places, there are databases out there. Obviously, if you work with a professional should be able to provide you that information, should be able to tell you what the industry average is, if you're doing better than the industry or lower than the industry, and what is it that you should be expecting. And if the industry average, your gross margin needs to be 20% and your gross margin is only 10%, there's something very, very wrong.
Right.
You probably are in the wrong business, or something is not happening right. And then after taking your gross margin into account, your net margin, let's say, is 5% as an industry average. If you are at 1% or 2%, again, there's something that needs to be looked at. And so if you follow the benchmarks and compare yourself to others who have had above average successes in the industry, it always helps in comparing and looking. And it doesn't need to be the business of the same size as yours. This could be a $50 million company, and you could be just a $200,000 company. You can still, when it comes down to the averages and the percentages and the margins, it should be very close. It's the cost. When it comes to that, there might be economies of scale involved in all that stuff, but you can only fluctuate so much. It's not that it's going to be almost twice the amount or 3 times the amount. But yes, to answer your question, there are industry averages available that you can refer back to, use those as a benchmark to your model or to your financials, and then make decisions based on that.
What else would you recommend for a small business owner to consider in order to keep track of their profit margins?
Sure. So let's go back to the basics. Let's go back to the start where we started. What's your bottom line, first of all? Create strategies to keep an eye on everything the way it should be. Lay it all out. It will not be a bad idea to have a projected cash flow on a weekly basis, projected out to 6 to 8 months, and then try to follow that as much as possible. Make everything predictable. You can make it a science if you like. It's entirely up to you. Keep an eye on your gross margin, keep an eye on your net margin. Make sure that if you're working on increasing your revenue, that you should give an equal importance to reducing your expenses. And that's pretty much how you can actually convert it into a science.
Well, thank you, Adil. I think that's been very helpful to our viewers, and I appreciate you coming on the show today.
Thank you. Thanks for having me over.
Thank you.